Right, let's check in now with the eNCA Money Desk for a look at what's happening on the economic front this week. Devin Morgan is joining us tonight. And Devin, I want us to begin with economic data. Stats SA has in fact released tourism figures.
Yes, indeed. That's being released, Tembekile, good evening, on Tuesday. The other big one is inflation figures, which are released on Wednesday. That's largely expected, by the way. Let's start with the inflation first. That's largely expected to stay within that band between 3 and 6%. That's the crucial band for the Reserve Bank not to consider inflation to be too risky when it comes to considering interest rates. But the one you speak of, tourism figures, that's released on Tuesday. It gives you, Tembekile, the tourism accommodation income for the month of February. Now, why this is important is because in December, we had tourism accommodation income drop to below 50%. In January, there was a 72% decline. Obviously, the holiday period would be over in February, but it would be very, very interesting to see what's happening with the B&Bs, the hotels, how they are coping as far as vacancies of their rooms are concerned. It's still pretty bleak. There aren't any international tourists on our beaches or at any other sort of tourist attraction. So whether or not the local tourism mobility is replacing that, we'll have to wait and see what happens on Tuesday. But no, there isn't any huge expectation that those figures would dramatically improve, Tembekile.
Retail giant Pick n Pay, then, they're also out with results this week. What are we expecting ahead of that release, especially in the context of the COVID-19 pandemic and its effects on the economy?
Yeah, you're right. Pick n Pay, this is a retail giant. It's already told us last week that it's expecting a 4 billion rand loss in its annual results, on sales at least, as a result of those restrictions being placed on tobacco and alcohol. That was the theme of the retail sector last year when it came to losses. But really speaking, these giant retailers are doing pretty well in terms of consumers buying groceries. And that's the important thing. The one thing with retailers and the results from them and the results from banks is that it gives you a window, a chance to look at how consumers are behaving and how healthy those consumers are. So as far as Pick n Pay is concerned, like I said, some hit as far as alcohol and tobacco sales expected, but just generally speaking, they seem to have been quite resilient through the year. We'll see what the nuances are when those results are speaking to the CEO tomorrow at 1 o'clock at Tembekile.
Another fantastic week, I think the second week for the Rand so far this month. Do we expect that to continue for a third week?
Yeah, no, it really has been a rally for the local currency, at least last week. And a couple of reasons for that. I mean, the very obvious one is that the world economy is beginning to improve, at least when the major economies are considered. China is releasing economic data that showed some improvement. That's the second biggest economy in the world. The United States doing the same, more or less. And then here's the big one. Interest rates by many of these global banks are low at the moment. And when that happens, you tend to get investors still chasing our yield here in South Africa. Our interest rate is pretty high compared to what we find internationally. So the Rand is benefiting from that. And of course, as far as you and I are concerned, it's just, a good positive input for our petrol price and just inflation in general. So we want to see the Rand, at least improve a bit better off that good rally it had last week. And the way things look, it might continue in that trend, Tembekile.
Devin Morgan from the eNCA Money Desk. Devin is, in fact, eNCA Business Editor. Good to speak to you as always, Devin.